We're going to cover trading the Eurodollar using RSI. Now, I've written about or talked about RSI before, and many of you will already be using RSI in a number of different ways to aid your trading. Now, I want to cover a rare, though not unique, method and apply it to Eurodollar on a daily timescale. What we're looking at here is a normal RSI indicator with a moving average of the RSI overlaid. The simplistic trigger is that when the RSI crosses above the average, the market is bullish and vice versa. However, that trigger has to have confirmation, and that confirmation is provided in the case of a bullish trigger by a move above the high of the day that at the close saw the RSI above the average. In the example that I'm showing here, I'm only going to point out the moves that have such a confirmation. There was a period of false, unconfirmed moves during January. Now, firstly, you can see a positive trigger at the beginning of December. The high that needed to break was 106.38. Prices then rose by more than 4 big figures during that month until going into and through January, Eurodollar was caught in a wide range. That didn't prevent a bearish signal being provided on the last day of December though, but given that that was over the Christmas New Year period, perhaps only the truly extreme trader would have been involved, but there was scope during January for some modest profit potential. Or the next trigger that was given in the RSI crossover, came towards the end of January, where a positive call is confirmed with a move above 108.75. The subsequent upside yields 5 big figures up to February's peak. Now, there is no self signal from an RSI perspective, not at those highs, but as you can see below here, the RSI signals are for 3 days above 70%, which is a pretty good overbought indicator. And in addition, some of the sharp-eyed amongst you will have noticed a bearish engulfing pattern that was created by the 12th of February decline. And that takes us on to one final downside trigger, and that was posted on February the 17th, where despite the net decline of the day being pretty minor, RSI levels broke below the moving average. Confirmation was a move below 111.06, and the market has remained below that point since, at least at the time of recording this. I hope that you'll be able to see through these slides the usefulness of using RSI in this way, and perhaps you'll try it out for yourself in other markets. The parameters that I've used here are my own personal adaptation, and I'd encourage some of you to experiment yourself and see where you'd like to go from. But if you'd like a starting point, the RSI that I've used here is a 13-day closing basis. The moving average is a little bit more unusual. That's an exponential 13-day, and it's offset displaced by a further 8 days.